Okay, so we're going to discuss the tutorials 5. Tutorials 5 on the foreign operations. Okay, for foreign operations, you try to look at Myra Berhad, established in Naira in Croatia on the date acquisitions here. It was stated in Naira, which is in Croatia's dollar. So we have HRK in terms of the value here. Okay, so we're going to look at here the amount of the. Okay, so you have here the Naira shares capitals. For shares capital, we have 40 millions. Okay, credit balance in a revaluation reserve, they have 10 million. And the RE that I have here is 12.5 million. Yeah? So altogether, at the beginning, the value of the net assets here is 62.5. Yeah? Okay, this one is on 30th of June. So Myra have this one on 30th of June. Okay, so on the 30th of June 2015. Okay, and then there is a revaluations on 31st December 2015. Yeah? So the financial year end here is on 1st of July until 30th of June 2016. Yeah? So it quiet on 30th of June here from 30th of June to 2015 to 30th of June 2016 here is only 1 year. Yeah? Okay, so it means that when we calculate the exchange reserve, it's the same amount as the translation reserve because the operation here is only for 1 year. Okay, so this is what Naira have for the statements of comprehensive income. Okay, revaluation surplus here. So revaluation surplus was done in the current year on 31st December. Okay, so if you look at here, the amount of revaluation surplus is 6. So previously they have 10. So altogether become 16. Yeah? Okay, and then the tax altogether that they have. Okay, so Naira Limited, this is the statements of financial position. So they have assets, liability, and so on. Yeah? Okay, if you look at here, the total shares capitals that we have here is 40. Still, if we compare at the acquisition date, this one is still 40. Okay, revaluations at the acquisition date is 10. So it means that there is an increase in 6 here, which is in a current year. Okay, and the returns earning at the beginning, we have 12.5. Okay, now it's increased. So if you look at here, there is a profit that were recognized in that year. So the profit that we have here is 27,500 here. So 27,500 here is increase in the profit. So this is a current year profit. Okay. So now we're going to look at the information that we have here since this was only for 1 year. Okay, so we're going to look at the information that we have here. This is the exchange rate. So the exchange rates here is 1 ringgit to Hong Kong is given here in terms of ringgit Malaysia. So ringgit Malaysia to HR, okay, to HRK. So this one we need to divide. So since we have around ringgit Malaysia, so it said that 1 ringgit Malaysia is equal to 0.2 HK. I just use this one only. Yeah? Okay, so now we want to decide whether we want to times or we want to divide. Yeah? So now we want to convert from HRK to ringgit Malaysia. So to ringgit Malaysia. So 0.2 HRK, just so this example, is equals to 1 ringgit. Yeah? So to get 1 HRK here is equals to 1 divided by 0.2. So in this case, we need to divide. In this situation, we have to divide because this is from Malaysian ringgit to HRK. So information is given here is in terms of HRK. So we need to divide on to get a Malaysian ringgit. So this is at the acquisition date. Okay, and then this is the average rate. Okay, this is at the beginning, acquisition date. Okay, this is at the revaluation date, and then this one is a closing rate, closing rate at the currency. Okay, so this is information that we have. Okay, said that Myra Limited conducted transaction in Croatia using kuna, so using kuna. So this information is in kuna, so we need to translate from kuna to Malaysian ringgit. Okay, so this is what we have here. So since this is only 1 year, so for the statements of comprehensive income, the statements of comprehensive income, we need to use the average rate. Yeah? So the average rate here is a 0.25. It's given here as a 0.25. This one we need to divide, yeah? Because we want to change from kuna to Malaysian ringgit. So from kuna to RM, yeah? Kuna 0.2.5 is equals to 1 RM, yeah? So this one to find 1 kuna, okay, 1 kuna to RM, okay, you need to divide, yeah? You have to divide. So this one need to divide. So the average rate that we have here is 0.25. So all the item in the income statement, we need to divide with 0.25, except for, okay, except for the revaluation surplus. So revaluation surplus here, we need to look at the date when the revaluations was done. So the revaluations was done on 31st December. So during that date, the rates that we have here is 0.33. So find that the amount here is 18.18. So this is the profit. Profit for 27,500 kuna has been to translate to Malaysian ringgit is equals to 110. Okay, this is for revaluation surplus, and then this translation loss here only can be you can have that translation loss after we prepare the statements of financial position. So we can prepare up to this one. Okay, and then after that we need to look at the statements of financial positions. Okay, so for the statements of financial positions here, so all the assets, since we're using the closing rate, all the assets and liability need to be translated at a closing rate. So closing rate here is rate at 30 of June 2016. The rate here is 0.5. So all of this one, assets and liability, need to divide with 0.5 here. Okay, so you thought if you look at here, we already divide this one for the, for examples, the non-current asset, we have 180 here, and then current liability here. So we're going to have here, and then you find that your total net assets here, so your net assets here is 192. So remember that this net asset is equal to your equity here. So the amount of your equity should also equals to 192. Yeah? Okay, so in equity itself, so remember that. So in equity itself, you're going to have the elements. Okay, if you look at here for the equity, okay, equity, we're going to have elements of shares capital. We're going to have a revaluation reserve, going to have RE, and also going to have for the exchange reserve here. Okay, shares capitals that we have here is for T. So for T, when we translate here, should be translated at the acquisition date, so 0.2. So you're going to have 200 here. Okay, for revaluation reserve, we have two components here. So at the end of the year, the amount is 16. Okay, 16, from that 16, at the acquisition date, the amount is 10. It means that there is increase in the current year of 6. Yeah? So there is an increase in a revaluation reserve, which is done on 31st December. So that's why for revaluation reserve, we have two rates. One is at the acquisition date, which is 0.2. Okay, and then post here. So post that you have here is 6. 6 here is at the revaluation rate at the revaluation date. So divide, yeah, divide with 0.3, 0.2 here. So altogether you have here is 18.18. Yeah? Okay, now we need to find the RE. Okay, to find the RE here, RE that we have here is the ending RE. Yeah? So ending RE here is equals to, ending RE here is equal to the beginning RE. Okay, and then plus the profit for the year. So beginning RE that we have here, okay, the beginning RE that we have, okay, is equals to, okay, how much you have for this one? Beginning RE is RE here is 12.5. So 12.5 at the rates of 0.2, but with a 0.2 plus a profit here. Okay, so for the profit that we have here, so profit here, we already translate the amount of profit here is 27,500. Okay, this 27,500 was translated at 110. It's also translated at 110. So for 12 divided by 0.2 here, 12.5. Sorry, this one is 12.5. So baby RE is 12.5. So 12.5 divided by 0.2 here. Okay, so you're going to have here is equals to, how much you have here? 12.5 divided by 0.2. So we're going to have here is 62.5 here. Okay, 62.5. Okay, and then plus the amount for this one we already translate here is at 110. So 110. So when you total up here is equals to 172.5 here. Okay, so now we plug the figures here. Okay, for the shares capitals here, we'll translate here at the 0.2. So you have 200 here. Revaluation reserve, combinations of pre and post here. We're going to have 6818 here. Okay, 6818 here. Okay, and then revaluation reserve, so the returns earning that we have here is 172.5 here. And then at the end, we need to find this figure. At the end, the amount should be 192. Yeah? Okay, at the end, the amount should be 192. So you need to total up here. Okay, when you total up all of this figure, so you find that from this amount, you find that the total amount here should be, okay, when you total up here, the total amount here is equals to 440.68. But you want plus the revaluation reserve as exchange reserve, and then the amount should equals to 192. So means that you need to minus here. Instead of plus here, you need to minus to derive the figure. The ending figure should be 192. So to find this figure, so exchange reserve that you have here is 440.68 minus 192. So you're going to have the amount here is equals to 248.68. So the amount that you have here is 248.68. But I want the amount to become 192, so this one need to minus it. So minus here means that you're going to have a exchange loss. Exchange loss. So since this is only 1 year, so the amount of exchange loss here is equals to the translation loss. Also equal to translation loss. This one we're going to transfer to your income statement because it's only 1 year. Okay, so the amount of 248, the exchange reserve here will be transferred to your income statement. So you're going to have the same amount in the income statement. So this is what you have. So your translation loss is equals to your exchange reserve here because it's only 1 year, only for 1 year. Okay, so you're going to have 248. So plus these two figures together, and then minus 248, and then you're going to have total comprehensive income at 120.5. Okay, so that is what we have for question 1. Question 1 is simple here, but the things that you need to understand here is to decide whether for the exchange rate whether want to divide or want to time. So in this case, give you in terms of ringgit Malaysia to guna. So ringgit Malaysia to guna here, we need to divide. Okay, so we have done with the first questions. Okay, so questions 2. Questions 2 is a little bit tricky for questions 2. Okay, so for questions 2, we're going to look at this one. Okay, on 10th of April 2012, so April 2012, Whiteland acquired 100% interest in Lin Limited, a company incorporated in South Africa. The presentation currency in the South Africa is ZAR. On the dates of acquisition, Lin Limited net asset was presented by shares capital of 20. So they have capitals of 20. Okay, this one is on 1st of April 2012, shares capital 20, and then the returns earnings here was 2. Only these two items, so we're going to have here 22. So 22 here is the value of net asset at the acquisition date. Okay, and then this is a financial statement for the year 2015. So 2015, they are using 30 of June 2015. So you're going to have this one. So if you look at here, the financial year end is 30th of June 2015. It means that the company that you have here in the current year, so the current year here will be on 1st of July 2014 until 30th of June 2015. Okay, and then a previous year, T minus 1 is 1st of July 2013 until 30th of June 2014. Yeah? Okay, and then T minus 2 that you have here is 1st of July 2012 until 30th of June 2013. Okay, and then 1st of July 2011 until 30th of June 2012. Yeah? So this is at the date. So the acquisition is around this date. Yeah? So we have from 3 years prior to the current year. As we look at here, we have 2 years, 3 years current year. Yeah? Okay, so you have, and then it said that in the year 2000, if you go to that information, it said that in 2000, okay, in 2014, and here we have an exchange loss of 4960. 4960 is already in ringgit Malaysia, so you have a loss here. Okay, so this is what I have. Financial statements for the company, income statements here, profit, tax. Okay, this is what you have, and then it's statements of financial positions, all the items, RE, and then returns, earnings, total equity. Yeah? So if you look at here at the acquisitions here, our shares capital is 20, RE. So RE during that date was 2. Yeah? So it means that that has increased by 53. It means that from the dates of the acquisition, which is on 10 of 10 of April, so on 10 of April 2012, okay, there is only 2, but now in the year 2015, financial year end 2015, already 55, by 5, so means that there is an increase by 53. So increase here is starting from 10 of April until 30 of June 2015. 30th of June 2015, there is an increment by 53 in the profit. Yeah? But if you look at here, increase in the RE, so profit for the current year, if you look at here, the profit in the current year from the income statements here, okay, from the income statements, you have a profit of 45, profit of 45. So the current year profits of 45, this is a current year profit of 45 here, so means that the pre here is from 10 of April until 30 of June 2014. The profits that we have here is 8. So 8 here is considered as a post-acquisition. So increase in profit here, okay. From that period, so we have 53. 53 here is from April 2012 until 30 of June 2015. Okay, if you look at here, profit in the year 2015 here is 45. So it means that the post-acquisition profit from the dates of 10 of April 2012 until 30 of June 2014 here, there is an increase in the profit or RE here by 8,000 or 8 millions only. Yeah? So this is the post-acquisitions RE. Okay, and then it says that the functional currency, okay, the functional currency that we have here, okay, is in a local currency. So once the information is given here, it's a functional currency in a local currency. So means that when the method that we're going to use here, we're going to use a closing rate method. So we're going to use a closing rate when you have this information. So, okay, no revaluations or impairments were recognized in a currency. Okay, the PPE using a straight line basis. Okay, illustrated financial position limited. For the year ended, there is a translation reserve balance of 4960 debit. So you have the translation reserve or exchange reserve that has a balance of 4960. debit. So debit means that you're going to have a loss. This one is only already in Malaysian ringgit. Yeah? Okay, so this is the rates that are given here. So approach, we have this is that at the acquisition date. Okay, this is a closing rate 2014. Okay, this is 31st December, not related. Yeah. Okay, this is a closing rate 2015. And then this is a closing rate 2016. 2016. And then the other one we have an average rate. So only this rate is important. So the rest is just give you without any information. So. Okay, so only the things that you have here. So you need to prepare the statements of profit or loss and others comprehensive income as at 30 of June, 30 of June 2015. Yeah. Okay, now it's given you in terms of ZAR to Ringgit Malaysia. Yes, so ZAR to Ringgit Malaysia here. So if you look at here, in terms of the rates that's given here, so it said that okay, for this one, 1 ZAR, okay, 1 ZAR here is equals to 0.38 ringgit Malaysia. So we want to translate from ZAR to ringgit Malaysia. So in this situation, we need to time, yeah, we need to time. Okay. Okay. So now we're going to translate the income statement. So the income statements, when we translate here, we are using the average rate. So the average rate here, 1 ZAR during the rate on the average rates here, 1 ZAR here is equals to 0.4. So just time with this 0.4, time this one with 0.4. Okay, all this one you need to time, yeah, time is 0.4. So you're going to have here, okay, profit before tax and then also the tax and then profit after tax you're going to have here is 18 million. So remember this one. Okay, this one we need to find this one after we prepare a statements of financial positions. Yeah? Okay, so this one we keep for a while. So the rest is okay, just time with a 0.4. So this one we're going to find after you prepare the segments of financial positions. Okay, so now we're going to prepare segments of financial positions here. So segments of financial position, all the asset. Okay, asset plus liability should be translated using closing rate at 30 of June 2015. So the rate here is 0.31. Yeah? So the rate was 0.31. So just time with the value of assets total, all the assets and the non-current assets and the assets. So you find that the amount of the total assets here is 38.75 here. So this is the amount of the total asset. Okay. And then we need to find that the shares capital here. Okay, so remember that your total asset here is equals to your liability plus equity. Yeah? So your liability here, so we're going to translate. So for this one, we can translate using a closing rate. Yeah, so closing rates here. Okay, if you want to up this one, you're going to have here. Okay, you have 9.3. Then you translate here is 9.3 plus here. So you're going to have here is 15.5 here. So if you want to find your net assets here, so the net assets here is 38. Okay, 38.75 minus 15.5 here. So the net assets here should be 25 here, 3 here. 3.25. So this is will be your amount of your equity. Yeah? So that one will be the amount of equity. Yeah? So remember that for the equity, okay, the total equity should equals to 23.25. Yeah? Okay. So the equity, elements of equity, we have shares capital. Shares capital here is 20. At the acquisition dates here is 0.38 times 0.38. So you're going to have here is 7.6. Okay, and then you have RE, and then have an exchange reserve. So when you total up these three figures here, it should equals to 23.25 here. Okay, so we calculate for the RE first. because the exchange reserve will be the ending figures. Okay, the balancing figure. This one will be the balancing figures. Okay, we look at the RE here. Okay, for the RE that we have here, we have a beginning RE. Okay. Okay. So beginning RE, we have at the acquisitions date, we have 2. Okay. 2 RE and then plus post acquisition 2 is at the acquisition date, and then post acquisition here we have 8. Yeah, okay, we already calculate previously, and now your ending RE is 55, so this is the ending, and then minus the current year profit 45, so you're going to have increase in the profit 10. Yeah? So 10 here, and then minus the pre that you have here is 2, so means that the post here is equals to 8. Yeah? So post is equals to 8, and then plus the current profit that you have here is 45 here. Okay. So we're going to look at here. So the acquisitions here, this one should time with 0.38. Yeah? Okay, for the post here, okay, we have to find here. This one is totals here. We already have the amount here is 18. Yeah? Okay, so we need to find the value of post here. Okay, post here is 8,000. Yeah? Okay, so for the post here, we need to find the value of post. Okay, so how going to find that one? Yeah? Okay, so we need to find, okay, we need to calculate the amount of post here. What is the value of post here? Okay, so the value of post here, you need to find the net asset. To find the net asset, okay, at 1st of July 2014. So the net asset on 1st of July 2014, you have shares capital 2014. This one, because you want to find this post. So you have shares capital. So shares capital that we have here is 20 times with 0.38. So you're going to have here is equal to 7.6. Okay, and then you have the okay, so we proceed with this one. We want to find the net asset at 1st of July 2014. The shares capital here should be at the rates of 0.38, because this one is at the acquisition date. The same thing for this also 0.38. 38. So we're going to have here is equal to 7.6. This one is equals to 0.76. Okay, and then we have the exchange reserve here. The amount of exchange reserve that we have here is equals to negative of 496. This one is already given, given. And then at the end, you're going to have your total assets. Okay, so total asset on 1st of January 2014, 1st of January, sorry, on 1st of July 2014, so the total asset that we have here is 30, so the 30 here, so you need to find the rate on 1st of July 2014, so the rates of 1st of July 2014 here, we need to time with the rate at 1st of July 2014. So 1st of July 2014, if you look at here, okay, we don't have information about that one. 1st of July 2014. So we are going to use the rate at 30 of June 2014. Same thing, the same rate. So this one needs to time with, okay, for this one we need to time with 0. So the rate during that time on 30 of June 2014 here is time with 0.425 here. So this one is equals to, okay, if you find here, the amount is equals to 12.75 here, 12.75. So now we need to find these figures. So we total up this one, so 7 points, so put it here. So when total here, shares capital plus RE. So RE have two elements, pre and post. Okay, we don't know the value of post, so we need to find this one. Okay, and then plus the exchange reserve here should equals to 12.75 here. Okay, because of this one, because this is the value of the total asset at 30 of June 2014. So the rate here is 0.425 here. Okay, so you plot the figures here. So the shares capital that we have here is 7.6 plus RE pre we have information here for pre here is equals to 0.76. Post, we don't have that one. We need to find this one. Post plus the exchange reserve. So since you have a loss of 4.96, so minus you equals to 12.75 here. So the post RE here is equals to, okay, the post RE that you have here is 9.35 here. Okay, this one will be your post RE. So the post RE here will be 9.35. Okay, so then we can plug to that amount. Yeah? Okay, here we have here the post RE is 9.35. Okay, so now we're going to find the exchange reserve here. So we said that the value should be, okay, the RE, you have two elements here for the RE. Maybe we'll put it here. Okay, so this is what I calculated previously. Yeah? Okay, already given. So now we want to find the RE. Yes, so for us E is our 9.35 here. So 9.35 here. Okay, so just show you this one again. Yeah? Okay, so post RE we have 9.35. So from this amount, then we can find the figures that we're going to find here. Okay, so now in the year 2014, okay, 2015, sorry, 2015 here, want to find that here, the amount of the equity. So in the year 2015, in the year 2015, okay, can put here, the amount of the equity is equals to 23 to 5 here. So for the RE here, RE you have two elements, the 2, 3, and also the post here. Post here is 8. So post here is 8. So you're going to look at here is 20, or the calculate here. For 8 here is 0.76. Okay. For 8, we already calculate previously. Okay, from 8 here, the amount is equals to 9.35 here. So this is what you have for that 8, 9.35. Okay, for the 8 here, we have a 9.35. Okay, so you're going to have here is 9.35 for the RE and the post RE, and then we're going to find for the exchange reserve. So the exchange reserve here, when you total up these two figures here, all of these figures, you find that the amount here is equals to, total up by this one you're going to have here is 19. Okay, if you look at here, you're going to have here is total up. Okay, you need to total up at the end. You have another thing. So we're going to, can I provide you with this one? Put it here. Okay, maybe. This one is already the answer. I just want to show you the answers. Okay, so we're going to look at here. We want to find the equity. Okay, so equity in the year 2000. Okay, equity in the year 2015 here should equals to 23.25 here, based on this one. 23.25. We already calculated previously based on 23.25. Okay, 0.25. Okay, so the equity, the amount of equity should be 23 of 25. Yeah? So from this one, we have shares capital. Shares capital here is 20 times 0.38. So we're going to have here is equal to 7.6. Okay, the first element, the second element, you have RE. So RE, we have two elements here, pre. Pre here is 2 times with 0.38. 38, this one. So you're going to have here is 0.76. And then for post here, post we already calculate here. Okay, 8. So 8 from the 8, based on the calculation previously, from based on this one, you find that the post RE here is 9.35 here, 9.35. Okay, and then the elements that we have here is a currency profit. Okay, in the RE, yeah. So you have a currency profit. Suppose that it will be in the elements of the RE. So we're going to have a currency profit. So the currency profit from the income statement previously, we're going to have the amount here is equals to 18. Yeah? So 18.0. This one is from the income statements. Yeah? Currency profit. Yeah? Okay, and then the last one, you're going to have the elements of the exchange reserve here. So exchange reserve here is a balancing figure. So we need to find this value. At the end, the amount should equals to, okay, maybe I need to bring this one. Okay, this one. Okay, so we need to find the exchange reserve here. So the amount at the end should equals to 23.25 here. Okay, need to total up these all figures that you have here. So when you total up all of this amount, you find that the amount here is equals to, okay, going to check for that one. So the amount that we have here is equals to, okay, can you calculate that one? 8.24. Okay, total up for this one. 7.6, okay, plus 0.76, plus 9.35, plus 18. So you're going to have here is 34.71. Okay. Okay, so you total up all these figures. Okay. And find that the amount here 7.6. Okay, maybe you have that one. Need to calculate that one. 7.6 plus 0.76 plus 9.35, and then you're going to have here is equal to 17.71 plus 18, plus 18. So 35.71 is 23.25. You're going to have 12.46. So 12.46. Okay, so we have total up here. We're going to have here the amount is 37. Okay, so plus 23.25. 35.7, 35.71, yeah. So total up 35.71. You want the figures here should be 23, yeah. It should be 23. Okay, so we have here, so the shares capital plus the RE plus the exchange reserve here should equals to 23.25 here. Okay, for shares capital you have here is 7.6. The total RE here is for these three figures. Yeah? The total RE that you have here is 0.76 plus 9.35 plus 18. Yeah? So altogether for the RE that you have here is 28.11. Yeah? 11 plus the AR here should equals to 23. Yeah? So it means that we need to minus this amount. Yeah? So the ER itself, okay, the ER here is equals to 23.25 minus 35.71. So we're going to have a loss. In this case, we're going to have the here to find the figures here. The ER going to have a loss. ER going to have a loss of 12.46 loss. So that is a ER exchange reserve, a loss of 12.46. Okay, this loss here is accumulated. Accumulated for 3 years. Accumulated. Okay, the loss is accumulated. Okay, from 3 years. For 3 years. Okay, so if you look at here, it said that in the year 2000, I'll put here a little bit over here. If you refer back to 2000, it said that in 2014, okay, so 2014, they have a loss of 4.96, so 4.96. And then in the year 2015, the accumulated loss, that we have here is equals to 12.46, 12.646. So means that there is an increase by, okay, the increase by the difference between these two figures, 12.46, okay, minus 4.96. So you're going to have here is equals to 7.5. Okay, increase in loss of 7.5. So increase in loss 7.5 here is means that this is a translation loss. Okay, translation loss in 2015. So this one will be amount that you're going to transfer to the income statement. Okay, if you look at here, so that one will be the amount of transaction loss in the year 2015. Okay, this is the amount that we're going to transfer to the income statement. Okay, this one amount is that going to transfer to statements of financial positions. Okay, so we look at the previous answers that we have here. Okay, so the exchange reserve that you have here is a 12.46. Okay, the returns earnings here, you have 28.12 here. So the return earning of 28.12 here, you have a pre here, pre of 2 here is equals to 0.76 plus post. Post you have 8 here is equals to 9.35. Okay, and then plus a current year profit. Current year profit is 45. Okay, that 45 is equals to 18. Yeah? So when you total up, it's equals to 28 in 28.11. Yeah? Okay, so this is what you have here. This is how to find that 9.38. So this is how to find the 9.38. 9.35. So 8 here, 9.35. This is how to find that amount here. Okay. So this is to calculate the post-RE. This one is to find the post-RE. This one is on the date of 1st of July 2014. Okay, so the transitions to the RE. Okay, so this is a loss that you have here, loss for 2015, the one that you're going to transfer to the income statement. Okay, this is the amount that we're going to transfer to income statements. Okay, the last one, question 3. Question 3 here is Idea purchase 100% is a Moro Limited company in Morocco. Okay, net identifiable assets that you have during that time, NIA. Yeah? So the IA that we have here is 1890. Okay, the returns earning, if you look at here, the RE that we have here is 90, and then shares capitals here, the shares capital is given here. Here the shares capital for Moro here is 160. 1,600. So when you total up here, you find that the shares capitals here or the equity here, the equity that we have here is 1690. Compare with a net identifiable asset 1890. So the difference of 200 here is considered as an increase in a revaluation reserve. Yeah? So increase in the valuation reserve. So at the date, we're going to have the RE here is 90 at the acquisition of 1st of January 2014. RE is 90, shares capitals here is 200. And then another one, you have a revaluation reserve of, the shares capital here is 1600. And the revaluation reserve here is 200. How to find this figure? From here, the difference between the net identifiable assets and the value of the equity. So revaluation reserve here, we have 200. Okay, so this is what we have. And then this is a statement, income statement. Okay, for the income statements, you have profit. Okay, profit after tax is 70. Yeah? Profit after tax 70. Okay, and then we have a revaluation surplus. So revaluation surplus in the currency at the pre, we have 200. Okay, now increase by 10. So you're going to have 210 will be the ending balance of a revaluation reserve. Okay. So movement in the equity. So there is a dividend paid for this one, dividend paid. Okay. And then you have the statements of financial positions or the assets and liability here. So it said that returns earning. Returns earning on 31st December 2014 was 120. Yeah? So 120. So you acquired this one on 1st of January 2014. During that time, the RE was 90. Yeah? Now at the end, on 31st December 2014, the RE become 120. So means that increase in the profit here is equals to 30. Okay, difference between that two figure. Okay, revaluations was conducted on 1st of September and then increased the value to 10 million. Yeah? Dividends was declared on 1st of May. Okay, so this is the closing rate on 2014, average rate 2014. And then this is a closing rate. Okay, closing rate 2014. Okay, this is the acquisition date. Acquisition date, average, and then this is closing rate 2015. Okay, average for year 2015. This is the average rate. 1st of February, nothing happened. On 1st of May here, this is a dividend declared. 1st of September here is a revaluation. Okay, and then on 31st December here is a closing rates. Closing rate at closing rates of the for the current year. So this is the average rate for the year 2016. Yeah? So we're going to use this one. This one is for the income statement, and then this one is for the the income statement. This one is a statements of financial position. If you look at here, we have 3 years. 1st of January 2014 until 31st December 2014. Okay, the next one you have 1st of January 2015 until 31st December 2015. Okay, now we have 1st of January 2016 until 31st December 2016. So altogether we have 3 years accumulated, included for 3 years. So current year is year 2016. Okay, so this is what we have here. And now we want to translate. The functional currency here is in a local currency. So if you look at here, so it said that from 1 MD, okay, 1 MD to Malaysian Ringgit. So 1 MD to Malaysian Ringgit, to Ringgit Malaysia. So 1 MD, I'm using this one. 2 MD, to 2 MDs here is equals to 1 Malaysian Ringgit. So we need to times here. For this one, we have to time here. When translate, you need to time here. Okay. So we translate here. Remember that yes, so we're going to translate for the income statement. Translate for the income statement, guys. Okay, so the income statement that we translate here, we are using we need to. Okay, so for the income segments here, we're going to use the average rate. So the average rate on 31st December, rate for the current year, the average rate here is 2.05. Okay, this one is give you in terms of the Morocco to Malaysian Ringgit. So Morocco to Malaysian Ringgit, MD to Malaysian Ringgit. So you need to time, so you have to time. So times here, this one is the average rate, average rate in the year 2016. So you times here altogether here, positions here, and then you find that the profit of 143. Yeah. Okay, revaluation reserve. Okay, revaluation reserve was conducted on 1st of September. Rate during that time here is 2.11. Yeah. So you're going to have 21. Yeah. Okay, so this one we need to find. This one is after you prepare or translate the financial positions. Okay, so now we're going to look at this one. Okay, and we look at the statements of financial position. Okay, for statements of financial position, we are using the closing rate. All the assets and liability should use closing rate at 31st December 2016. The closing rate during that time was 2 ringgit and 20. So just time here. So this is the total asset 6182. Okay, and then okay, we have to look at here. That is your total asset. And then the total liability here. So you just want to find what is the value of your exchange reserve here. Okay, we need to find the value of your equity. So when you total up these two figures, so you're going to have here is 1 here, 1, 2, 1, 0. Okay, 1, 2, 1, 0. So you're going to have here is equal to 1, 2, 1, 0. So 1, 2, 1, 0. From here, if you look at here, the total assets, okay, is 6182. So you need to minus 1210, then it should equal to the total equity. Yeah? So the total equities here will be, what you have here for total equity. Okay, going to minus that one. So the total equity that you're going to have here is equals to 4972. So when you calculate here, you have to make sure that your equity here should equals to 4972. So now we're going to find the value here. So we know that your equity here has elements of shares capital plus the RE. So for the RE, we are going to have both here, the RE and also post, and also a currency of profit. And in this case, we have a dividend also. We're going to have a dividend. And then plus the exchange revaluation reserve. We have the revaluation reserve. Again, for revaluation reserve, we have pre and also we have portion. Okay, and then plus the exchange reserve. So this one we're going to find this one. Yeah. Okay, so we want to work on this one, and then at the end, the figure should be 4972. Okay, so we need to find this one, the shares capitals that we have here. Okay, shares capital, how much you have for shares capitals here? Okay, for shares capital, Okay, shares capital, the one that you have for shares capital here, the value of shares capital, you have 100, 1600, 1600 times with 2. This one is for shares capital here, is equal to 3,200. Okay, the next one, you have the RE. So RE here, we need to calculate here because we have many items for the RE. Okay, so you need to calculate for that one. Yeah? So the RE, we have pre. Okay, so for pre, we have 90, 90 pre. So pre here need to time with the acquisition date, 2 ringgit. Okay, this is the acquisition rate. Okay, and then for a post here, okay, in the year 2000, okay, in the year 2014, there is an increase by 30. Yeah? So 30, you need to time with this average rate in the year 2000. This is acquisition. Okay, this one need to time with the average rate at the year 2014. 2014. The average rate for the year 2014 that we have here is a 2.01. Okay, and then you have here is a post here, pre to the post here we have 4 elements. So for the post you have the year 2014 and then again post in the year 2015. So in the year 2015 it said that the ending beginning balance brought forward here is 382. So we need to find the profit in the year 2015, 382 minus 100 and the amount that you have here is 120. So we're going to have 262. So 262 need to time with the average rate in the year 2015. So the average rate in the year 2015 here will be 1.96. Okay, and then you have the current year profit. So current year profit, just take the figure from the income statements. So you're going to have here the amount from the income statements that you have here for the current year profits here will be 143.5. Okay, so for the RE, we have few elements. The pre, the post we have for the year 2015, post for the year 2014, 15, and then current year profit. So 4 items for the RE to find the ending RE. So when you total up here, we're going to find that the value here is equals to 893.2. Okay, for the one that you have here is for the RE for the revaluation reserve. Okay, for revaluation reserve here, you have 2 here. 2 here is the at the acquisition. At the acquisition, we have 2, so 400. And then for post here, the rate here is 2.11, so you have 21. So you total up here, you have 421. 1, so 421.1. Okay, so now we can plug to these figures. Okay, the shares capital that we have here is 3,200. Okay, and then for the RE you need to total up all of these figures. So 90 times 2 here, we're going to have for this one is 180. Okay, 180 plus 30 times 2.01, so 60.3 plus this one. And then for this one, 262 times with 1.96 here. So you're going to have here 513.52. So total up all the RE here. Okay, so for the RE, we total up here. Okay, 180 plus 60.3 plus this figure 513.52 and then plus this one 143.5. 143.5. So all together you're going to have for the RE here. Okay, the total RE here, and then we have one element here, dividends here. Okay, so for the dividends here is 2. So 2 times with rates dividends here at the 1st of May here is 2.15 here, 2.15 here, so it's equals to 4.3. So 4.3 here, we need to minus here, plus this one here. Okay, so just put it here, I put it here. So we're going to have here your shares capital should equals to 4972. Okay, the shares capital has the equity, so not equity, the equity should have a amount of 4972. So the equity has the elements of shares capital plus RE. Okay, RE ending RE. Okay, and then you need to plus a revaluation reserve, and then also plus the exchange reserve should equal to this amount. Shares capital 3200. Okay, for returns earnings here, so returns earning, when we can calculate here. Okay, for the RE, can I put it here? The RE here, so the RE you have here is 180 plus 60.3 plus this one is 2014, this one is a pre, and then plus 513.52. 513.52 here is for the year 2015, and then plus a 2016 here is a current year profit 143.5, and then minus a dividends here. Dividends here is 4.3, yeah, 4.3. So when you total up all these amounts here is equals to 897, yeah, 897.32. Okay, and then plus a revaluation reserve. Okay, if you look at here, the revaluation reserve that you have here, total up here, your revaluation reserve here is 421.1, yeah. 421, when you total out your revaluation reserve, okay, the revaluation reserve you're going to have here is 421.1. And then plus the exchange reserve, it should equals to 4972. Okay. So if you look at here, the exchange reserve here is 4972 minus all of these figures here. 4972 minus total up this amount. Okay, when you total out all the amount here, how much you have here? Okay. Okay, we need to find that one. How much you have? 3200 plus 897.32 plus, okay, we're going to plus that one. Okay, 3200 plus 897.32 plus 421.1. Yeah? So you're going to have 844,518.42. Yeah? So means that you're going to have an increase here, the amount of increase. Okay, so the amount of increase that we have here should equals to, okay, we have here minus, okay, 4, okay, okay, so you're going to minus 4972. So there is an increase of, okay, 4972 minus 4518.42. So you're going to have 453.50 and 38. 453.58. Okay, so glad to have that one, yeah. So that one will be the amount of the exchange reserve here. So exchange reserve here is for the accumulated, accumulated. So it's for the year 2014 until 2000. This one is from 2014 until 2016. So we need to find how much the amount of the year 2016, yeah. So this is I show you the calculations. So how you derive to that figure 493. Okay, 0.02. Suppose this one will be 493, yeah? Okay, 493. Okay, oh, this one is after you minus. Okay, this one is before minus, so you need to minus a dividend. So minus dividend 4 here. Okay, because you need to minus the dividends 4. Okay, minus the dividends 4. So you can find the amount is equals to 893, yeah? So 893.02. Okay, based on these calculations, okay. So now we need to check here. So the ER, so we want to find how much the amount of the translations that you have in a currency. Yeah? So the adjustment for 3 years. So this is what you have. The net asset on 1st of January, we have a shares capital 160 plus the RE and then revaluation reserve. So altogether we have 1890. So 1890 need to time with, this is the net asset. So the net asset we're going to compare between the closing rate on 31st December and the opening rate. Yeah? So the rate here is 1.97. This one is 2 ringgit. So means that in this case the rates will be lower. Okay, the ending here is lower than the beginning. Yeah? So ending is lower than the beginning. So we're going to have a loss here. Okay, we're going to have a loss. Okay, and then increase in the profit here. So increase in the profit that we have here is equals to 30 because it said that the ending balance in the year 2014 RE 2000 ending 2014 here is 120. So 120 minus pre, yeah? Minus pre RE 19, so we're going to have 30. Yes, so 30 here we are using compare the closing rate with the average rate. So closing rate is lower than the average rate. So again, we're going to have a loss. So in the year 2014, we only have a increase in the profit and also the net asset. So altogether, we're going to have 57.9. So that one will be the loss. Loss we have here is for 57. So the total loss that we have here is 47.9. Okay, now we look at the year 2015. Okay, for the year 2015, the shares capital is still at 1.6. The R now become 120. So this is the ending 2014, become the beginning of 2015. So you're going to have 120. Revaluation reserve still at 200. So when you compare 1890 with a 1690, so you have 200 here. So altogether we have 1920. So the closing rates here, since this is the net asset, so the net assets here, so you're going to compare closing rate with the opening rate. So closing rate is higher than the opening rates here. So we're going to have a gain here. Okay. And then we're going to look at the increase in earning for the year 2015 here is the RE brought forward in the year 2016 minus the RE in the year to ending to the beginning on the ending 2014. Yeah? Okay. So you're going to have 120. So the profit for the periods here is 262. Closing rate compared with the average rate. Closing rate is higher than the average rate. So we're going to have a gain. So total gain in the year 2015 here is 199. Okay, and then for the year 2016, the currency here for the year 2016. Okay, do you have that one in the year 2016? Should I put that one? Okay, in the year 2016, we have shares capital 160. Okay, 1600 plus RE here is RE brought forward. Yeah? 384, this 82 is given, yeah? Plus 220. Okay, so compare here. So you are going to have 2182. So the closing rate is 2.2, which is higher than the opening rate. So we're going to have a gain here. Okay, increase in RE for the currency profit, closing rate compare with the average rate. Closing rate 2.2, average rate is 2.05. So again, we're going to have a gain here. Okay, and then we're going to have a evaluation reserve. In the year 2016, we have many items here. We're going to have the net asset, and then we're going to have the profit. Okay, the other items that, okay. Okay, we're going to have a profit, net asset, and then the other item that we have here is a revaluation reserve, and also we have a dividend. So we have 4 items here for the year 2016. Okay, so we're going to have 4 items altogether. Okay, so revaluation reserve, we have 10. So 10 here, closing rates here is you have 220. This is not opening rate. It's supposed to be a revaluation rate. Revaluation rates here is on the 1st of September to 11. So we have an increase here. So we're going to have a gain here. Okay, the dividends here, the closing rate is 2 ringgit and 20. And then we're going to have the dividends rate, dividend date. Okay, dividend date here is on 1st of May. So the rates here is 2 ringgit and 15. It's supposed to be increased, but for a dividends here, we need to minus dividends here. Even though you have an increase here, but it's considered as a loss because we need to minus dividends from the RA here, from your net asset. So we're going to put it as a loss. Okay, so we're going to minus this amount, 0.01. So the transaction gain that you have here is to be 316.67. So this is the amount that we're going to transfer to the income statement. But to the statements of financial positions here, we're going to have a gains of 457,888, which is to have a loss in the year 2014, 57.9. Gain in the year 2015, 1199, and then gain in the year 2016 is 316.78. So you total up all together here for that 3 years because the exchange reserve here is accumulated, accumulated amount. So you're going to have 457.88. So this one will be transferred to the statement of financial position. This one will be transferred to the income statement. So this is what we have here. In your segments of financial positions. Okay. The exchange reserve that we have here is this amount. Yeah? Okay. So from the calculations that we have previously. And then for the income statements here, this is a translation that we calculate previously, 316. Okay. So that is what we have for foreign operations. So if you have any questions regarding foreign operations, okay, you're going to discuss details. Okay, I really hope that you're going to go through all the tutorials questions for the EPS and also for the operations, the foreign operation, and also a practice exercise for operating segment and also the related party. Okay, so for this coming Monday class, I just want to wait for your questions. Yeah, we're not going to discuss anything. If you want me to discuss any of the answers, we're going to discuss that one together. Yeah? So for that Monday class is more on Q&A class. Yeah? Okay, so I'm going to end this one. Yeah? Hopefully that will help you. Yeah, for this one. Yeah?